So, good morning, good afternoon, good evening, and a very warm welcome wherever you're tuning in from around the world. I'm really happy to be hosting this panel today. It's a really exciting topic. We've got a fantastic international panel of speakers. And I think it's going to be extremely stimulating. So a very warm welcome to you all to ask questions during the session. We'll be able to answer those live as we go along, and we'll have a range of questions for the panelists. So I'd like to start off by doing a short introduction to our panelists and just give you a little bit of a flavor of how we're going to structure the coming 45 minutes. So first of all, we have with me here in the studio Dovile Grigiene, who's the CEO of Swedbank here in Lithuania. We also have on the line Otavio Lopez from the IFC, who's Deputy Portfolio Manager at the IFC in Washington, D.C. So a very warm welcome to you from the other side of the pond. And then we have in London from the EBRD, we have Jacek Kubas. So a very warm welcome to you as well. Unfortunately, we have some technical issues between Vilnius and New York. So Kisa at the moment was hoping to join us, and we're still trying to work on to see if we can bring her back into the discussion at some point. And Kisa is a senior executive at Refinitiv and podcast host. So it's also a chance for you to check out her podcast after you've, of course, watched this panel today. So without further ado, let me ask for some short introductions, and really I'd like to get a flavor for, why is sustainable finance interesting for you, my panelists. So Dovile, tell me please a little bit about, what is sustainable finance and, what inspires you about it?
Hello, everyone. First of all, it's a big pleasure to be on this panel, and I congratulate all organizers for this FinTech Week of Lithuania. It's an amazing event. To talk personally, I've been actually working in finance field for the last 20 years. Since 2000, I'm in banking, in mostly traditional banking all the time. And I could say that one of my passions is banking. But about a year ago, I developed a new passion. And actually, this is sustainability. I became very interested in the area overall, not just finance, but overall, because I kind of always look for ways to contribute further to the societal agenda. And I realized that sustainability is the way to go. And of course, to talk about sustainability, sustainable finance, recent events and recent changes in EU, in European Union, we have a green package and a very dedicated overall governance towards driving towards further sustainability. And definitely we will talk more and more about it, and I hope I can share my experience for the last year that I accumulated while researching the topic myself.
Super, super. So that sounds really nice, having that banking background and then really coming into the sustainability area in the last year and having that passion. Thanks, Dovile, and very, very warm welcome once again. So over to you then, Otavio. Tell us about you. I know you're both a practitioner and an academic. You've got a lot of experience in this area, so please tell us a little bit about yourself and your inspiration.
Sure, Alex. Can you hear me well?
Loud and clear.
Perfect. So first of all, I'd like to thank you and everyone who made this event possible. It's an honor to be here and share my experience. For those who don't know me, my name is Otavio, and I work at IFC's Treasury, managing IFC's. I'm part of the team who manages IFC's $40 billion in liquidity. And IFC is part of the World Bank Group, which is a very relevant player in this arena. I've been, as you said, working and studying sustainable finance. I've been a key person in implementing ESG standards and sustainable indicators to our liquidity management. And I've been focusing my doctoral thesis also on sustainable investing. So what have I learned? And I thought, this is a short panel, but I thought, what could be the messages that I could bring of what have I learned that would be useful? I think to be a better sustainable investor, and this is something that I think will connect with everyone in the audience, is we really need to be focused on the impact. So I started here describing myself and my work, and the one number I put out is the amount of money that we have, assets under management. And that's very common in the financial industry. But I could have started also saying that IFC's Treasury in the last 6 years issued bonds that are expected to reduce greenhouse gas emissions in 18.4 million metric tons. So I hope that one day we go in that direction. And why am I saying that? Because we tend, even in the sustainable world, to sometimes forget about the impact. I think it doesn't matter. Hello?
Yes.
Just try to look into the system again because we already live.
Thank you. Pardon me. This is
Trying to
Kisa.
reconnect Kisa at the same time, and there's a bit of sound on the line. But you were just talking about the impact, and that's great to not to forget that.
Yeah. So continuing, the impact is very important, and the impact is also very difficult. The financial sector especially is not as close to the real economy as other sectors. So tracing that impact and connecting the dollars being invested in a certain fund or instrument or company with a final impact is not that easy. And what am I talking about when I talk about impact? I'm talking about tons of plastics reduced, amount of water cleaned, number of jobs created, tons of greenhouse gas emissions taken away from the atmosphere, or even numbers of trees planted. Asking the right questions is essential. And I think asking about impact and specifically how the impact is calculated is very important and is going to be very important for the sustainable industry going forward. The second point that I think it's very important to share out of the main lessons I learned in my recent work in research is that, in my opinion, sustainability, for it to achieve the scale that society and the world requires of it, it has to be connected with financial results. Why do I say that? The United Nations Intergovernmental Panel on Climate Change, most recent report concluded that to prevent the worst effects of climate change, we need to get to zero greenhouse gas emissions in every sector within 50 years. That means that a very steep upward curve will have to flatten and come down until 2070 to zero. The only way to get to that level of impact is if financial markets and capital markets participate in it. So I'll take 1 or 2 minutes here just to explain the three main ways through which ESG ratings, green bonds, label bonds, impact investing in general can be connected to financial results. The first one is through a better performance. There's the saying that all good things go together. So normally a company that has very good ESG ratings, governance, environmental practices is normally the more organized company who will also have better financial results. So that's one. The second one, and to me this is very important and very dear, it's the government regulation and incentives. Why do governments impose cars to have airbags or seatbelts? There is a social benefit to certain policies and requirements. So that's the same thing for the environment. I think a lot of people like to criticize certain policies from the government protecting the environment, but it's the same rationale. It might increase slightly prices, but there's a greater good, and it's a way to put into the prices of goods externalities that right now are not being included. So the last one, I mentioned two already. The last one is it's a growing idea in the sustainable and impact investing world, which is the idea of climate value at risk. So how will your company or what will the issuer be affected by the increasing temperature in the world? So with statistical levels, we use the value at risk. I don't need to explain this in detail, but it's basically a econometric measure where you can come to a value of a certain likelihood of how many losses a company may have. And that's also a way to put a dollar sign into the issues related to the climate.
So Ottavio, that's
I
that's
guess,
a really impassioned sort of call to action. Fantastic that you're laying out some of the ways in which we can actually achieve this, and I can really sense that passion. So that's great. Thank you very much for kicking us off. Let me jump over to Jacek in London and just do a short introduction there, and then we can come back and just have a quick review of how we're going to spend the next half an hour together. So Jacek, very warm welcome to you. Just tell us, very very briefly, your story. What is it that inspires you about sustainability?
Hi guys, hope you can all hear me, and best regards from London. I thought I'm going to sit under the palm tree in London to send a message about the climate change in a way, so that's where the background is from. I'm an associate director at the European Bank for Reconstruction and Development, focusing a lot on capital markets and fintech, and started the journey a couple of years ago on the green capital markets as well. EBRD is a development institution, and I'm personally very passionate about positive change. And what I think really, if I would say it very personally, what I really think helps me to wake up every morning and force myself to go for the morning run is really the thinking about not only more positive, or let's say positive year, but also greener change. And that's what I'm really trying to look at across the project that we are doing as EBRD, including the one that we are implementing at the moment in Lithuania, which I hope we'll have a chance to talk about during the panel. And then one thing that really inspired me to look much more on capital markets and the green business in that regards was a very simple life story that happened to me 3 years ago. I did my workout and I went to buy a smoothie. So I'm getting a smoothie and I ask a question that now no one of us would ask, is, can I get a plastic straw? And I got the look at saying, look, plastic straws are bad for the environment. You're not going to get a plastic straw. That was 3 years ago. But I got that smoothie in a big plastic cup. And that made me think, what is the perspective we are looking at the finance and green finance? How actually much broader we should addressing that. And that's what I think is important, because Ottavio told you a lot about the investment side and the business side, which is great. But there's also much more policy side that I hope we'll be able to emphasize and discuss today, that should support that and create A, incentives for development of green finance, and B, also eliminate any barriers that there are. And obviously, as we could see with the EU level, EU Green Deal and the EU taxonomy, there's a lot to now look at and discuss as well. So I look forward to our discussion. I'll stop here and waiting for your questions. Back to the studio, guys.
Super, thanks, Jacek, and that's been wonderful to hear about. A very personal story. Going to get your smoothie and having the whole plastic straw experience, and then being able to take that up to the policy level, where you can make a real sort of positive change and a greener change, as you said. So let's dive into this. So the way I'd like to structure the next half an hour together is to jump back a little bit and just to touch for our audience to make sure that the concept of sustainable finance is simple and clear. I think we've got a very wide, very broad audience listening in today. So it would be great to get a simplified understanding of what sustainable finance is, to get us on the same page to start. And then if we move on from there, we can actually explore some of the key trends. And then I'm really looking to the panelists to provide some great examples, some very concrete examples as to how sustainable finance is being lived and delivered today. And then we'll move on then and ask you to gaze into the crystal ball and tell us a little bit about the future of sustainable finance and what does that mean. So can we really achieve these targets in the next 15 to 20 years? Can debt and capital markets make a real difference here? So let's jump into the first question. And I think some of you have touched on this already, especially Ottavio, in terms of affecting the bottom line. So what are business attitudes for your target audience? And how do they really relate sustainable finance to a company's bottom line? So maybe Jacek, let me throw that back to you from the perspective in London.
Sure, thank you for that. So if we start at the perspective from London, let me then start with the words that Mark Carney, the former governor of the Bank of England, said, which I think resonated with a lot of us. He said, the businesses or companies that are not looking into addressing climate change or climate risk in their business, at some stage in the future, if they neglect it, they're going to go bankrupt. And it really is the statement that I personally adhere to. Why is that? First of all, investors are looking much more towards the ESG element. ESG is environmental, social governance. We're looking at the European Union at the moment with a number of policy initiatives. So you set up something which is called EU taxonomy, which now indicates the line of business that can be classified as green and be financed through a number of instruments, including green bonds and green capital markets. If we think about the green capital markets, last year we saw something which I haven't seen in any of the other segments of capital market. Green bonds was the fastest growing market in 2019, with 250 new issuers coming to the market to issue green bonds. We are sitting in Lithuania. You guys issued the sovereign green bonds, and there are also energy company that issue a green bond. So you know that this part of the business is becoming, in a way, the new normal. Obviously, we have to understand what and how we use the proceeds for the investments that are being financed, and how we are actually improving the environment, coming towards eliminating the climate change and being a carbon neutral. And that's something that also comes with element of green finance that not very often is brought into discussion, which is on the reporting side. So how the company can report to investors that actually their activities are green or greener, and how those investors can be made aware whether their money are actually going to that side. For us as a bank, so we invest across 38 countries, and last year we invested 10 billion euro. And out of that, 46%, so 4.6 billion, we did in green investments. So we have our internal committee that assesses our investments and classifies them as green. Obviously, we really hope with the future that this number will also, and the target, increase as we see also the client demand. But for this to happen, we also see a lot of need for the policy action to really underline the business, to be able to create incentives and barriers. And that's something that we are doing at the moment at Lithuania. And I know our head of office in the Baltics, Ian Brown, is also listening to this panel, where we are working with the Ministry of Finance to support creating the environment that will help the creation of incentives, legal, regulatory, tax-related, for development of green finance, which also includes green capital markets, and elimination of any barriers, and transposing the EU taxonomy to the domestic level. And I think this is really, really important. On the other hand, and this is a bit of a provocative thought, one of our clients, in a conversation said something which also resonated with me, and I haven't had yet a thought about addressing. He says, look, please do create incentives for green, because we are really interested in fostering that agenda, but please don't punish us for investing into brown. And then the question now means, okay, what it really is and going to be the brown investments, and are they really going to be punished going forward, or sustainability really going to become the mainstream? Because we have to maintain the climate and the environment that we have and do not let it worsen, that the brown will not exist anymore. But that's a much more philosophical question going forward.
Well, let's see if we actually have time to get into philosophical questions. But Dovile, could you share then?
Yes, I would like to react as well, because I think having incentives is definitely great. Everybody agrees on that, But there is other things that need to be considered. And I think for me, one of the key things that we are watching is consumer shift in awareness. Because even 5 years ago, people would not be able to tell you what sustainability is. And now we are more and more aware. And this tells us as a bank to act and start shifting our product line, let's say. So last year, we already introduced new products, green leasing for CO2 reduced emission cars. This year, we're preparing green mortgages. We will have an electric car, zero, kind of emission product as well. On a pension fund business, we also run quite a substantial business in Lithuania. Last year, we had a big reform, actually. And while reform was happening, we figured we could use it for the sustainability angle as well. And with change just in the system, we were able to transform and invest 30% of all our funds towards more sustainable ESG funds, actually, 30% already last year. And a very important thing that I checked yesterday as well, that they still keep performing better than the regular funds, so to say. So this is also a very tangible impact to the bottom line.
Fantastic example, and maybe also just for the audience, just to give a sort of an explanation of the mechanics of the green leasing product. So what does that really mean? If somebody comes to the bank and says, "I would like a green lease from you,"
Yes, the cars have to classify by CO2 emission level. If it's below a specific number, it classifies for the product. So basically, and then you have an additional incentive in terms of interest rates. So this is great
Super.
and working out.
So then the client is actually saving money, they're getting a sort of a cheaper lease, and they're doing a positive thing for the planet.
Yes,
Fantastic
that's for sure.
example. Super. And Ottavio, what about from your perspective? You know, you've talked a little bit already about the ESG focus on investment funds from your side. You know, how do you see the sort of the global change? Is there this consumer shift that De Villa was talking about? Is this, you know, filtering through for companies and their bottom line? Tell us a little bit more from your perspective, please.
Sure. I completely agree with De Villa. I think what De Villa brought up in terms of consumer shift has been the driving force for a major shift in funds policies, in banks policies, and we could even say in governmental policies. Is that enough, though? So that's the question. I think it's a strong force and it's coming, but the consumers are usually not as organized because of the nature. It's just not one single entity. So I think it's an amazing force, but there's a still need for greater engagement from issuers, governments, and etc. As you notice in my open remarks, I already made a few comments where I think what will be the future of sustainable finance. So I do think that the sustainable finance will be more and more related to financial results. It has to, and it will be more focused on impact. So at IFC, we've been a key player in issuing green bonds, social bonds. More recently, during the COVID-19 crisis, the World Bank and IFC announced $14 billion of aid to fight against coronavirus. And IFC issued social bonds, including a $1 billion social bond to address that. You also asked Alex something, which is what is more tangible. So I don't know if it's very clear for everyone, but where we are now, ESG label bonds, it started a long time ago. Some people trace it back to Quakers, to even further to Islamic and Jewish rules. But what we have today was basically born in the 1950s with the social responsible investment, the SRIs, that has developed into the ESGs, label bonds, and SDGs. And the World Bank has been a key player in most of those events. Green bonds, for example, Swedish funds, pension funds, if I'm not mistaken, connected the World Bank Treasury and said, we want to invest in projects that are green, and we don't have those projects. And the World Bank said, I have those projects. So that's how green bonds were created. So I think this is a clear example of what is happening. So someone who has resources, has money, has liquidity, buys these bonds, which will then create an impact. And it's very important to have reporting requirements and clear connections between the investment and the impact, as I said. Finally, I'd like to make a point that there has been research showing that whenever there's an independent auditor, an independent pair of eyes evaluating the real impact of green bonds or label bonds, results seem to be much more effective. So there is a correlation between having an independent auditor and the actual impact of such a label bonds.
Super. Thanks for that. Thanks for that summary. And if I sort of wrap up this first part about what is sustainable finance, it's been really interesting to hear sort of three main parts there, I think. So first of all, on the product side, from the green bond perspective, right through to pension funds, right through to green leasing. We've talked a little bit already about government policy, the need for incentives or the role of incentives in promoting sustainable finance. And then also, very importantly, I think, consumer shift and how our consumers, perhaps less organized, but also shaping the dialogue around the demand for sustainable finance. We also have a question online, which is around supporting sustainable startups. So yes, that's also something that I'm personally doing at a practical level, and we're really encouraging startups to either think about creating a triple top line, so positive people, planet, and profit, so sort of ESG thinking, or even to pivot towards that direction as well. And Devilla, you're active there as well,
yes,
right?
Yes, actually Rocket is one of our sustainability fintech hubs in Lithuania, supported by Swedbank. So proud supporter.
Super. So I hope we answer Frank's question there, and we can of course talk about that more offline as well. Okay, if we move on to the second part, then, having talked about what is sustainable finance and getting that sort of broad understanding at those three levels, let's look at the key trends or these other drivers. So you've also talked about some examples in terms of the products from yourselves. Unfortunately, as Kisa is not able to join us again due to technical issues, it would have been great to hear from her about the whole Black Lives Matter movement in the US. I know she also has some very good examples of sustainable finance and financing marginalized communities in the US. But again, maybe we can just hear a little bit from our panelists in terms of some really inspiring examples that you've seen elsewhere. So Jacek, why don't you kick us off with that?
Great, thanks for this. I would like to first say that also on the green fintech startups, I wanted to say two things. One is we are working on with one of the accelerators at the moment, SWG, for the cohort of fintech startups. So if there are any sustainability fintechs there, please, you can Google us on social and apply. Mm-hmm. And we're also happy to work with Rocket as well. So I think that's something at the start that really is important to us. We as a bank look at the really wide range of green activities. I think one important bit is the green bonds coming from our markets in our countries of operation, mostly Central Eastern Europe at the moment, where the framework seems quite sympathetic towards it. What we see there actually, and this is an interesting observation, is that if you look at international investors like EBRD or others, they really are interested in green finance and green assets, green bonds, but also they see that there is not yet a supply of green assets coming to the market at the level that we would like to see. So this supply element has to be worked on, so there have to be more issuers coming to the market. But what we see talking to domestic investors, so let's put international versus domestic investors at the moment, they are not really differentiating green versus non-green because there is no also price differentiation. That comes to the issuer side as well. If the issuer has to do the green bond, and Ottavio alluded to it, we have a third-party opinion and we put extra cost to this. This is not yet coming back to in terms of better pricing when those bonds being issued. But hopefully this is something that's going to change in a minute. But as a bank, we run now really a lot of interesting, and because we were at the FinTech conference, I'm going to say cool examples of green finance. And by cool, for example, we have the program which is called Green Cities, with 32 cities sign up, and hopefully we're going to have 100 cities sign up to this very soon, which going to make our cities greener. What does that really mean in practice? It means, A, the bank supports the financing of greener infrastructure or other investments in the cities, and on the other hand, also cities sign up to an action plan to implement the greener policies. So it's a win-win solution that we see, which is very, very beneficial. The other element which I really like and was mentioned before, the green mortgages. So housing actually, and housing stock is one of the biggest energy consumption user globally. So how can we make this more efficient? So by giving the green mortgages, the banks can also issue an instrument that has become quite important for us as investors, which is called a covered bond. It's a financial product, it's a debt capital market product that you issue and is secured, bank issue, and it's secured by pool of mortgages. If those mortgages are green, then we can have a green covered bond, which allows us to actually finance better, and it's much of interest in the mainstream there. So I really, if I look at capital market side, which is something which is close to my heart and my skills, I see much more green examples of products coming into play. And I think they are also, if you look at the policy principles, like, for example, green bonds, they relate to something we didn't mention, SDGs, Sustainable Development Goals, which are UN targets for globally set up for all of us. And that hopefully will be implemented. And the way to do it is also through financing by private sector and public sector. But I think, first element is, which we are still on the big wave of that, is to create awareness of green. And I think you mentioned the shift on the consumer, and we see it as well, but awareness is the first element of that. The B is, the action. So we have to action that for the deals, and we see that also growing. And then the third element, and I'm not sure it's for us, but it's also for politicians, is accountability. And are we having enough accountability? I will leave that question unanswered, but I think the big shift now going to come with the post-COVID-19 economic recovery, where we will see that sustainability and another element of it, which was mentioned by Ottavio or IFC, that's something really interesting, is the social bond element. Because at the moment we're talking about the green part a lot, but there was not much focus on the social bonds that could go for a number of programs like youth unemployment, or, for example, women in business programs that we are providing across countries of operation. And I would say that this is the second stage of that sustainability market that we will see going up in the coming years.
Super. I think that's some really good insights there, Jacek, and particularly like hearing about the policy aspect from the accountability and promoting accountability, and also you sharing some really good examples of the instruments or financial tools that you actually have out there on the market to make that shift. So, Ottavio, let's hear from you. Is Jacek and the EBRD, are they doing the right thing? Are these the right kind of instruments? You talked about the importance of capital markets in making this change. How do you evaluate this? Okay, we can't hear Ottavio. If we can get some sound on him, please.
I cannot hear you, Ottavio.
Okay.
I'm sorry. I was on mute. Let's put Jacek on the spotlight here. No, I'm just kidding. We're all multilaterals. We work together, and I completely agree with what Jacek. I think when he touched on price differentiation, that's a key discussion when it comes to capital markets, and that's where I believe we need to develop still. So you asked us to speak about going forward. I have many thoughts, and it's hard to know exactly where the industry is going to go. But besides the point that I already raised, I think ESG hopefully and it will become an indication to identify reduced risk. So higher ESG ratings, maybe green bonds, a better performance in that kind of developmental indicator would hopefully lead to smaller idiosyncratic risk, or beta, which is market-aligned risk. Today in the morning, I had a discussion with my team about some of the ESG ratings, and I think maybe for the more specialized audience who knows more about the products, I think it's very relevant for ESG ratings specifically to develop in two structured products, asset-backed securities, etc., and money market. Those are areas where, especially capital markets, I think, let's say those are not the low-hanging fruits compared to corporate bonds or some other instruments. So I think we will see development in those specific areas. Finally, I'd like to say that going forward, I think if we think about it, how did this rapid growth of sustainability investment came to be? There was basically two triggers. One is, like Davila said, there was a demand from, but there's also a key element, which is data. we never had in the history of humankind the amount of data and processing capacity of data that we have today. And data is essential to the discussion we are having. Data needs to be comparable, data needs to be updated, and data needs to be used correctly. I think everyone here has been in this environment for many. We know that there's space for improvement, and we know that there's going to be a rapid growth and improvement in this area. And I'm sure that data will be a key part of it. I think that in some of my experience in the years, I've noticed the change already in the last 2 or 3 years. And I think ESG rating agencies, and even the standard rating agencies now, credit rating agencies, are doing an amazing job into trying to bring issuers to speed on providing comparable, updated, quality data.
I think that's, again, a real shame that we don't have Kisa with us today. You know, working with Refinitiv, that's something that they're doing. They're really plugged into the data, and they've been honing this over a number of years. So, yeah, again, you know, for those watching, yeah, have a look at what Kisa's doing with her podcast and what Refinitiv are doing in more generally as well. Great insights there. Thanks, Ottavio. Davila, what are your thoughts?
I was just going to add some things, not to repeat what was said. Many good thoughts are out here. But basically, for me, sustainable finance is a new trend. It's a completely emerging trend that we need to catch on right now if we want to be good businesses in the future, and so on and so on. It's very important for everyone to understand that the framework of regulations is coming. We will all be able to identify the company impacts. And exactly this is how we will measure and understand what is green-washed or what is green, you know. Where I see that we need to focus not only on consumer overall attitudes and shifts, but also it's very important to work with business community for me, because we as a bank, of course, we are dependent on business impacts. So definitely all businesses need to understand, and I think I also have a message for the fintech community as well, because fintech community as such has an ability to be a front runner in this whole trend and change that will develop, because eventually in 5 years or a few more, everything will be regulated so the banks will not even, you know, be able to borrow money to the businesses that will not be on sustainability journey as such. So I think fintechs definitely can be using this trend and making the most out of it, and helping the businesses, the traditional businesses, transform towards this better journey towards sustainability. So this is important to take into account.
Super. And again, thanks for the question that we have online about the difference between being green and greenwashing. You know, Jacek, you've already talked about the cooperation with Startup Wise Guys and really looking for sustainable fintechs. So, you know, can you give the audience sort of a short summary? How do you ensure that those are really, you know, sustainable finance fintechs and not just sort of greenwashing fintechs?
Sure. So first of all, for SWG participation, you know, we welcome all fintechs. Obviously, it's not only limited to sustainability. So let me be clear on that. So welcome all fintechs from BRD countries of operation to apply. You can look at the announcements on SWG or our website. We also partner with Rocket, and that partnership went live last week. So I'm very happy that, you know, we find a way to do it. And then you're asking a really valid question, because I'm glad that this term was mentioned, the greenwashing, right? In a way. So can you a little bit, you know, dust it off or window dress and sell it as a green? So when we talk about the more mature markets, when we talk about the green bonds, we have a green bond principles. We're now going to have standards from the EU. We have the EU taxonomy. So we will, I think, especially in the European Union, be quite safe to say what is green and what is not green on the big business side. And I think having all the companies that can be a third party or a third opinion or third party opinion provider, that's going to bring us to this, which is good. But then comes to the fintech scene, when I think, you know, it will be much more discretionary to identify what can support or not sustainability. And I think it's very hard to define for the startup that is about to be developed, whether their solution truly is green or not. And I think that's not only for people like me to look at it, but also engineers and others that are green and ESG specialists. And that's a really interesting element. On the other hand, because sustainability, and we all agree on this, is, I would say, not only a new trend, but it's really going to be the mainstream sooner than we actually expect. I would say that a lot of fintechs will go that way. And then if I were to be a fintech, to be honest, which I'm not because I work in a development organization, I would connect to something that Ottavio said, the data. Because we want to have the data and the understanding, etc. Can we find the better ways to develop something new that will help us with the data? And then can we get that and link that to actually making the investment greener or more visible that is green? Again, that's just an idea that came a second ago to my head. But I think it's going to be really hard, at least at this stage, to do it. I think FCA, for example, tried to do it. So Financial Conduct Authority in the UK, they run the world most famous regulatory sandbox, even a little bit more famous than the Lithuanian one. So I'm so sorry to the Bank of Lithuania for saying that. But your sandbox is also amazing. But the FCA sandbox did something really cool. They organized this cohort of green startups. So they got 10 of green companies, purely green, to go for the regulatory issues and actually go for the sandbox regime. But the difficulty with this was, I think, for the FCA to define the conditions of what is green for such an early stage business.
Super. Thanks for touching on that. And Ottavio, I guess the whole concept of sustainable finance is considerably more advanced over there in Washington D.C. and with your organization and the World Bank. Is greenwashing still something that's talked about? As Jacek says, do we need to brush that off, or where is it today?
Thanks for the question, Alex. As you know, although we're based in Washington, D.C., the World Bank is dealing with projects all over the globe. Putting just for a second the bank aside, my own research on my doctoral thesis is deeply related to what we could call greenwashing. So my thesis is focused on trying to identify a connection between funds that claim to be developmental funds and see if they are different from other non-developmental funds, significantly, let's say statistically different. And on another angle, I'm trying to connect green bonds with a final impact on the climate. All of that is hard, and that's why I say I think it's essential, but it's not easy, and I think that's very valuable. And why is that very valuable? Because we don't want to see a world where, as I like to imagine a world where every single bond is green. Would the climate still change? So the question behind this, the many questions that could pop up behind this one main question is, are green bonds actually doing what they are supposed to when it comes to global warming and climate change? And that's an essential question to ask, because if they are not, we probably need to adjust things and avoid what we call greenwashing. Because if a green bond is not addressing the main environmental issue, it should be at least disclosed exactly what it's doing. To that point, I'd just like to add. Yeah, sorry, go ahead.
No, I'm sorry that we're running out of time, and I think that was almost sort of a very nice summary and conclusion into greenwashing.
Sure.
I think it would be great just to sort of wrap up with a couple of summary points, and then to go back to each of you for sort of a quick, short 1 or 2 words, the future of sustainable finance, to bring this all together. So again, we've talked considerably around green products, different. It's been really good to hear all of your examples on that. So thanks to all of you. We've talked about government policy, incentives. We've talked about the role of data and how we're moving to a much more data-driven life, where we can actually really measure the impact of sustainable impact of sustainable finance. We've talked about consumer shift. We've also talked about pricing and how we need to have more issuers, more strength on the supply side. And all of this, of course, is in terms of having a real positive climate impact. So last couple of words, the future of sustainable finance.
In my opinion, just two words: partnership and green recovery. So what do I mean by partnership is we put all forces together, governmental institutions, and the partnership between business and non-profits will start to happen, and between governments and international community, we will have better results. And green recovery is an excellent wish, and we have a chance to have it in a greener way. So this is my wishes.
Fantastic. Very upbeat way to end. Thanks, Davila. Jacek, from you, final quick comments.
Absolutely. I think, let's think about AAA. AAA is the highest rating in capital markets. And I think let's translate it now to awareness, action, and accountability. And let's make it personal. We've all changed, our life has been changed in the last 2-3 months so much. We started walking more, we started using bicycles more, and every change starts within us first. So let's change and continue having that change with us as persons, humans, and that will in the future also transpose to the thinking of us as professionals supporting the development of green finance. So that will be my message. Let's do the AAA.
Sean Sharp, AAA, fantastic, thank you. And Ottavio, last word from you.
I'm not as good with acronyms, so I'm just going to go with 3 main words. I think, as I said, impact is essential. I think financial results connected to sustainable finance is essential. And the final point that I'd like to make is standardization of data. I think standardization in this industry is going to be key going forward.
Fantastic. I think, ladies and gentlemen, you heard this first here. The future is bright. The future is sustainable finance. We're on the right trend. It's been wonderful to have you all today. Thanks to Jacek in London. Thanks to Ottavio in Washington, D.C. Davila here in Vilnius, Lithuania. And back over to you, Arumas. Many thanks for watching.
Thank you.